Hello and welcome. Thanks for joining this discussion, which has been arranged for you by the experts over at Pro Tax Accountant. Today, we are getting into a question that honestly trips up so many sole traders here in the UK. Do you really need a separate business bank account? Let's get into it and find out.
Okay, first up, let's talk about a situation I'm sure many of you know all too well, the sole trader's dilemma. That classic mess of mixing your business and personal money.
Does that sound familiar? I bet it does. This is where so many of us start. You're amazing at what you do, but your finances, they can quickly become this tangled web. Client payments get totally lost between paying for your weekly shopping and ordering a takeaway for the family. You know, it seems easier at first, but then tax time rolls around and it is just chaos.
And that brings us right to the heart of the matter. Is having a separate account something the law says you have to do, or is it just a really good idea?
So let's really unpack that, the law versus reality. Because what's legally required and what's practically essential for your business to thrive, well, those can be two very different things.
So to answer that big question right off the bat, is it a legal necessity? The short, simple, black and white answer is no, it's not. Under UK law, as a sole trader, you and your business are seen as a single legal entity. There's no law on the books forcing you to open a dedicated business account.
But, and this is a really big but, that is definitely not the whole story. And assuming it's that simple could end up costing you a ton of time, money, and, let's be honest, your sanity.
I mean, even the official guidance is crystal clear. HMRC, the UK's tax authority, strongly recommends you keep your business finances separate. Why? Well, it just makes your record keeping clean, simple, and way less likely to have errors that might, trigger an audit.
And that recommendation leads us perfectly into our next section, why separation spells success. We're going to move past just the legal stuff and into the real-world financial perks of drawing a very clear line between your personal life and your business.
Let's kick things off with a number that should really make you sit up and pay attention. £3,000. According to HMRC's own data, this is the average amount in allowable expenses that sole traders claim back every single year. That's a pretty big chunk of change, right?
And here's the kicker. When all your money is jumbled together, it's so easy to miss legitimate business expenses. We're talking about things like mileage, supplies, or software subscriptions. The data shows that sole traders using a mixed account tend to underclaim by about 15 to 20%. You are literally leaving money on the table just because of messy records.
Now, there's another massive reason to get organized, and it's called Making Tax Digital, or MTD for short. This is a huge government initiative that's changing how we all report our taxes. It's all about moving things online to be more accurate and more efficient. And here's the date you need to circle on your calendar. From April 2026, MTD is going to be mandatory for any sole trader with an annual income over £50,000. Now that might sound like it's a long way off, but it is right around the corner. You really need to be getting ready for this now.
And what happens if you're not prepared? Well, the penalties for not complying can be pretty steep. We're talking a potential hit of £300 for each late submission. Having a separate business account that easily syncs with MTD-compliant software isn't just a nice-to-have, it's practically essential to avoid these fines. Okay, so we have definitely covered the why. Now let's get into the how, making the right choice for your specific situation and your business.
Let's put them head-to-head. Your personal account? Yeah, it's usually free, but let's be real, it can look a bit unprofessional to clients and makes getting ready for MTD a total manual headache. A business account, on the other hand, might have a small monthly fee, but it builds trust, it integrates smoothly with accounting software, and it can even improve your chances of getting business finance down the line. So, how do you actually decide? Just ask yourself a few questions. Is your turnover more than $1,000? Are you making more than, say, 20 business transactions a month? Critically, does your personal bank even allow business use in its terms and conditions? Do you use software like Xero or QuickBooks? Are you planning to grow? If you're nodding along and saying yes to 3 or more of these, then a separate account is almost certainly the smart play.
All right, so if you've decided a separate account is the right move for you, what do you do next? Let's quickly walk through the simple, actionable steps to get you set up and ready for success.
Honestly, it's really straightforward. First, just double-check your current bank's terms on business use. Then, get your documents together. Usually it's just ID, proof of address, and your UTR number. That's your unique taxpayer reference you get when you register for self-assessment. Then, shop around. Compare the high street banks with some of the newer digital options like Starling or Tide.
You apply, and once you're approved, all you have to do is update your clients and link it to your accounting software. Simple as that.
So after all that, the question really isn't do I have to anymore, is it? It's are you ready to swap that financial chaos for the kind of clarity that will actually help your business grow and thrive?
And hey, remember, you absolutely do not have to figure all this out on your own. The team at Pro Tax Accountant, who kindly arranged this discussion for you, are absolute experts in turning these complex tax questions into simple, clear solutions for sole traders just like you. So get in touch with them for some guidance that's tailored specifically for your business.